Hello guys, welcome to my channel. My name is Knowledge, and today we'll be doing a very different question from the one we did last week. Last week we did PPE, which is property, plant, and equipment. Today we're going to do the statement of financial position, which is known as the balance sheet. Today we're going to do grade 10 work because there's someone who asked me to do to help with the balance sheet and the notes. But today I'm just going to do the statement of financial position only, and we'll do come and do the notes, right? So this is the question paper that we'll be doing. I got this question paper from Stain More Physics. So you can go and get the question paper and the memo and the answer sheet there. So, but I will try to link the question paper in the description box below. I'm not sure if I'll be able to do that, but I hopefully maybe I can. So, guys, the question is question 4. It says that you provided with the following information, or you provided with the information relating to Plaza Traders for the financial year ending 30 June 2019. Prepare the balance sheet or the statement of financial position for the year ended 30 June 2019. Note, show all your workings in brackets to end part marks as notes are not required. So in this case, this question paper, this question does not want us to do the notes, right? And then we only have 28 minutes to do it. That's quite fair. So we are given the information. We are given the post adjustment trial balance. The post adjustment trial balance means that this trial balance was prepared after taking the adjustment into consideration, right, into account. So that is why we have the post adjustment trial balance, and then we have the balance sheet section. In this case, we only have the balance sheet section. We don't have the nominal account sheet section. So as you know that you use the balance sheet section to do our statement of financial position, and the nominal account section to do the income statement, or the statement of comprehensive income, or the statement of profit and loss, right? So we have notes and additional information. So they are saying that the following must be taken into account when preparing the balance sheet. Number one, they are saying the net profit for the year amounted to 182,246 after all adjustments were taken into account. You must note that. Number two, it talks about depreciation. It says depreciation for the year amounted to 30,000 on vehicles and 4,000 on equipment. So they say note that depreciation has not been added to the accumulated depreciation account. So you can see here when we have our accumulated depreciation on vehicles, it says on the 1st of July, or on the 1st of the 7th month in 2018, which is the beginning of our financial year. So meaning that the depreciation for the current year was not taken into account. So we have information 3, which says 25,000 of the loan is payable on the 1st of October. Okay, we'll come and do this one as well. And then number 4, it says 20,000 of the fixed deposit will mature on the 1st of August 2019. So also come and do this one as well. And then it says the rest matures in 2021. So some details and figures have been entered on the balance sheet. So this question I had the answer sheet as well. So it was question 4. This is the answer sheet. And then you would see that we are only given the amount for trade and other payables, which was 86,000. 86,000. You must note that one out. So guys, I'm just gonna go to my Excel sheet now, and we're going to do this question. We're going to attempt it. Okay. So we're going to do this balance sheet. So that is how we would have our heading for the balance sheet, guys, and then we would have, the format of the balance sheet. You know how your balance sheet should look like. So here you'll have the foil number where you'll write the note number. If you have some cases where you did prepare some notes, you need to indicate which, the number of the note number one, note number two, so forth and so forth. So guys, firstly we're going to have our assets. Our assets. So you know that our assets are divided into two. We have non-current assets and current assets. So I'm gonna come here and say non-current assets. So under non-current assets, we're going to have tangible assets, right? Tangible assets or fixed assets. Tangible assets. And then we're gonna have again our financial assets. So let's come and check our current our tangible assets here. So we have how many tangible assets? Remember, the tangible assets are the assets that you can touch and feel. So we have a building, we have building and land, and then you know that in accounting we do depreciate buildings, but in grade 10 we don't depreciate buildings. The land is never depreciated, right? So yes, but building we do depreciate buildings. When you further your studies in accounting, you would see that we do depreciate buildings, but in this case we are not going to depreciate buildings and land. So now we have a vehicle, we do depreciate our vehicle. We have equipment, we do depreciate our equipment. In this question, if you check, we are given our vehicles at cost, and in the statement of financial position we recognize them at the what, at current value. And what is our current value? Our current value is cost minus the accumulated depreciation, right? So firstly, under our tangible assets, we have to recognize the building, which was 320,000. Because it's never depreciated, you're going to add it with how much? If you come here to your pre-adjustment trial balance, you see that you have the cost of your vehicle, which was 150,000, and then at the beginning of the year you had an accumulated depreciation of 110, right? And then you're going to subtract 150, subtract 110, you're gonna get 40,000, right? And then when you get 40,000, you also take into account that, remember that the depreciation for the year amounted to 30,000 and it was not added, right? You're going to subtract another 30,000, meaning that our vehicle will have a current value of 10,000, right? I don't know if you understand, guys. Okay, I'll just do my calculations here. Calculations. They said that calculations, vehicles. We had the vehicles that costed 150,000, right? We're going to subtract the accumulated depreciation at the beginning of the year, which is 110,000, right? And we also subtract the accumulated depreciation for the the depreciation for the which was 30,000. So we're going to be left with 10,000, right? So this is the 10,000 that we were looking for, and then we're going to add 10,000 here. So we come to equipment. Equipment. So let's see what they say about the equipment. The equipment depreciation was 4,500 here, right? You can see it's 4,500. And then they told us here that the depreciation, the equipment at cost was 90,000, and then the accumulated depreciation at the beginning of the year was 60,000. So you're going to say 90,000 subtract 60,000, you again subtract 4,500 to get what, your current value, right? and then you're gonna get a current value of 25,500 if I've calculated very well. 25,500, and then you're gonna add it here plus 25,500. So, and then you will be done with your accumulated, with your tangible assets, right? So when you add all this amount, you're going to get 355,500. So that is your amount for tangible assets or fixed assets. So now we're going to financial assets. Financial asset is, it can be the investment that you made or the fixed deposit. In this case, we had a fixed deposit at Africa Bank at 6.66% per annum, which was 60,000. And then if we check information 4, it says that 20,000 of the fixed deposit will mature on the 1st of August 2019. So when it says it will mature, this means we will now receive money, right? So, and it will not mature this year, it will mature next year, right? Because our financial year end on July, on June. And then, but this 20,000 will mature next year in August. So what are we going to do here? Remember, what is our non-current asset? Non-current asset are the assets that can last for a period of more than 12 months. But this one, it will not last for a period of 12 months, right? It will now become a current asset, right? It will now become a short-term investment. So we have to subtract this 20,000 from our investment. So it's gonna come, our fixed deposit 60,000, going to subtract 20,000, and then you're gonna get 40,000, right? And then you add these two, you're gonna get 395,500. So this is what we had to do, guys. I thought this question was very simple, I can say, but it was straightforward. Yeah, it was straightforward. So this is what we're going to do. So when we're done, we now come to our current assets. Now come to our current assets. These ones are those assets that cannot last for a period of more than 1 year. So more than 12 months, I can say. So our current asset, we're going to have inventories or inventories, however you pronounce it, inventories. And then we're going to have, what is our non-current asset? Another one is going to have our trade and other receivables. Trade and other receivables. So when you further your studies in accounting, you will realize that trade receivables simply means debtors control, right? And then last, we're gonna have cash and cash equivalent, right? So this is what you're going to have now. You're going to have your inventory. What happened in your inventory? When I was doing this question, I realized that they didn't give us an amount for inventory. So meaning that our inventory was a balancing figure. In this case, because inventory is inventory. Trading stock they didn't give us, so meaning that it was a balancing figure. So let's go to our trade and other receivables. Trade and other receivables, we consider our debtors control, right? Remember debtors control, and then we have income receivable here. This income receivable, it's other receivable, so we must add it with debtors control because we should receive it's an accrued income. What is an accrued income? Accrued income, it's an income that we were supposed to receive but we haven't received, right? We have earned the income but we have not yet received the income, right? And remember that in accounting we have the cost basis and the accrual basis of accounting. So here it's an accrued income. So we earned this income, but we haven't received it. So it's other receivable. Again, we have a prepaid expense. What is the prepaid expense? Prepaid expense is it's an expense that we paid in advance, right? So this this expense become an asset because we can, if we decide to end the contract that we had, these people will have to refund us this amount, right? So we're going to add our debtors control plus our prepaid expense plus our income receivable under our trade and other receivables. So we're just going to simply say 50. How much was our? How much was our? Okay, so how much was our debtors control? Our debtors control is 57,500. 57,000. Okay, 7,000. Seven. Oh, well, 7,000. 7,005. 7,500 plus. We're going to add with 1,250, and then lastly we add 2,000. 2,500. That is what we're going to have, and then we're going to get an amount of 61,250. 61,250. That would be our trade and other receivables. So now we're going to move to our cash and cash equivalent. Remember what makes our cash and cash equivalent? Our cash and equivalent include bank, include anything that has to do with cash. It falls under cash and cash. Even the name just explains itself. Cash and cash equivalent. We have bank, we have petty cash, we have cash float. We also have our short-term investments, right? The short-term investment here, we are talking about the 20,000 here because it's going to mature. Now it's going to be part of cash and cash equivalent, right? So we're going to add our bank, our petty cash, and our short-term investment under cash and cash equivalent, guys. So I hope you are following, guys, because yeah, this question was nice. 125,550 plus 1,500 plus 8,500 plus the 20,000 of the short-term loan. So after adding all these amounts, you see this thing keeps on showing my space. Okay, after adding all these amounts, we're going to have an amount of 155,000 550. 550. So after we're done here, we're going to have what we call our total assets, because now we have considered all the assets and then we're now going to have our total assets. So but now we cannot total our assets because we do not have our inventory. So since we don't have our inventory, let's move to our equities and liabilities. Let me fix here first. Let me merge this. So yeah, I'm fine with it. Okay, yes. So now we're going to have equities and liabilities. So equities and liabilities. That's the other section of the balance sheet, guys, of the statement of financial position. So under an equity, we're going to have owner's equity. We're going to have equities, right? Yes, we're going to have equities, and then under equities we're going to have owner's equity. Owner's equity. And then what is our owner's equity made of? Our owner's equity, guys, is the wealth of the business, right? We talk about our capital, we talk about our profit. That is where, if you people that have like further their studies, they know that there's another statement called the statement of changes in equity. We do that statement to calculate our owner's equity. But in this case, we have enough information to calculate our owner's equity. We have our capital at the beginning of the year. They didn't tell us that there was any additions. There was no any capital contribution. We have drawings. We have to subtract our drawings, right? And then lastly, they gave us the profit, right? Here is the profit. We're going to add our profit. So let's add them under our owner's equity. So we're going to add 55,000. Oh, we subtract 108,000, which is for the drawings. And then lastly, we add 182,000 to, 246. 246, guys. So, which was a nice calculation here. Everything makes sense. And then we're going to then have, okay, let me calculate it. Let me see. 550,000 minus 180 onto 3 plus 82,000 246. We're going to have 552,000 246, right? So that's the amount that you're going to have for owner's equity. So when you get this amount, you just also put it here because that is the only thing we have under our owner's equity. So now we're going to go to our liabilities. Liabilities are more like assets. They are also divided into categories, guys, as well. So we're going to have our liabilities. We're going to have non-current liabilities. Here we're talking about loan. We have only one non-current liabilities, which is loan or mortgage or loan. So let's go to our information. They are saying that 25,000 of the loan is payable next year. So if it's payable next year, meaning that it's no longer a long-term loan, it's now a short-term because it will be paid next year, right? So we have to take it out from our long-term loan. And then they said we have a bank of 160,000. So we're going to subtract the 25,000 from 160,000. Oh, sorry, guys. So we're going to say 160,000 minus 25,000. And then lastly, we're going to get our 135,000, which is our loan, 135,000. And then since I said we only have loan in non-current liabilities, we're going to put 135,000 here. So when you're done with loan, you go to current liabilities now. Current liabilities. Under current liabilities, we have trade and other payables. Yes, under trade and other payables. Remember, we were given this amount. They said it was 86,000. So there was no need for us to calculate it. So, but you can see what did they do? They just came here under trade and other payables. They added income received in advance, because if we receive income in advance, it's no longer it's not an asset, it's a liability. We have to pay back if those people decide that they want a refund, right? We have creditors control. You can add with creditors control, right? And lastly, you're gonna have accrued expense. You know what is the accrued expense? Is the expense that we were supposed to have paid for but we did not pay for. So we're going to add this three, then we're gonna get that 86,000. So now we are done. We're going to have to come to total. We're going to have total what? Not total assets. We're going to have total equities. And liabilities, guys. Oh, my time is running out. And liabilities. So total equities and liabilities. When we add our equities, you add the equities plus non-current liabilities plus current liabilities, which was 86,000. How much do you get? I get I get 773,246. So this is the amount, and then this is our balance sheet. Remember, the balance sheet must equate, just like it must be equal, just like the accounting must, yeah, it must. It's balance sheet just represent the accounting equation, right? The accounting equation says our assets are equal to liabilities plus owner's equity. So that is what happens here. You just take your total equities plus your total equities and liabilities, you equate them to your total assets, right? Remember that we didn't have inventory. So inventory, now we're going to take our total assets, we minus cash and cash equivalent, we minus 10 other receivables, and we minus our a non-current asset, and then we're gonna get an amount of 160,946. So guys, this was it. This is how you do the balance sheet, guys. And yeah, this was it. So now your balance sheet balance, or your statement of financial position, does balance. So this is what I had for you for today, guys. So I'm just going to do this. I don't even know if I have enough time to do this, because yeah, but you can see what I did. So yeah, this is it. This is how we were supposed to have done the question. So you can get the question paper from Staying More Physics, and there's the memo there. You can just go through it and then try to check if you understand everything that is done there, or anything, or if you have. But I think everything was clear in this question, and I'll try to get another question where they have the notes. Then we can do the notes as well. But this far, and then when you're done, don't forget to add your 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 balances here, where you can just say 773,246. You subtract 395, 500. You're gonna get an amount here, which is 377 746. So this is it, guys. This is the statement of financial position. This is your balance sheet, and this is how you were supposed to have done it. Thank you, guys. And please, guys, if you haven't subscribed to this channel, I beg you, please do subscribe to this channel, because there'll be more content coming through, and I'll be helping people. Those who have subscribed, thank you for your support, guys. I really, really appreciate it. Thank you, guys.